Ghana has set its sights on $3 billion in foreign direct investment entering the country before the end of 2021. This assertion is from the Ghana Investment Promotion Center, which has set that target of attracting foreign direct investment, or FDI, into the West African country. The Ghana Investment Promotion Center, which is behind the FDI drive, said the money is expected to boost investments in agribusiness, pharmaceutical, manufacturing, and industry, as well as other sectors of the economy to create jobs and spur socio-economic development. Reginald Yofi Grant, the CEO of GIPC, says the center has so far raised $780 million. He said the center has been working tirelessly to ensure it attained its target for the year, adding that seeking investment is a process that requires patience and concerted efforts to market the country and build a pleasant image globally. So where will this money come from? And why or what makes Ghana a destination for FDI on the continent? We'll get into that on today's show. I'm Tolulokwe Adileru Balogun. Welcome. This is Business Edge. Joining me from Accra, Ghana, is financial analyst Benjamin Ato Kwanzaa. Benjamin, thanks for joining us again on Business Edge. Welcome.
Thank you very much, Tolu. Thank you for having me.
So according to the CEO of the Ghana Investment Promotion Center, over the past 4 years, Ghana's investment climate has witnessed tremendous improvement. What's making Ghana so attractive for FDI?
Well, I think it's a combination of several things, but mainly due to proper economic management by the Akuffo-led government. This has also been coupled with a climate that is conducive and that is inviting to investors. So I think that these two main things are the main reasons why Ghana seems to be a good destinations for foreign investors.
Okay, so you've mentioned the administration of President Nana Akuffo-Addo. So obviously there's work that's been put in to position Ghana internationally for international investment as well. Is this the success that you would lay squarely at the feet of the Akuffo-Addo administration, or does it go back a bit further than that?
Well, the current administration has really put in measures that make the country very attractive for investors. First, for instance, there are certain policies that Akuffo-Addo brought in play when he took office in 2017. One of them, for example, is the One District, One Factory policy, which I have mentioned to you on here before. The idea was that, it's the government is trying to collaborate with certain private investors to make sure that they are able to set up a factory in each of the 260 districts in the country. Apart from this, there's also the policy that is supposed to help to drive the agricultural drive of the country. That is the Planting for Food and Job policy. Now, this policy is also geared towards the fact that the country is trying to, or Ghana is trying to be very sufficient and produce enough food to feed itself. And so government has put in place certain measures that make the agri sector very conducive for whoever wants to invest in it. And it's not just for foreign investors, it's for local investors as well. So I think that successive governments have done what they can to make sure that the economy is improved or is better than what they came to inherit. But at the moment, the improvements that we are seeing, or the investment that we are seeing moving into the country, mainly due to the policies of the Akuffo-led administration to make sure that investments are conducive and are worth the while of investors.
All right, so let's take a trip in history. In 2017, Ghana's FDI was 4.9 billion. It dropped marginally, as we saw around that time, with a drop in global FDIs in 2018 to $3.54 billion. In 2019, it further dropped to $1.01 billion. But despite the negative impact of the COVID-19 pandemic, Ghana actually saw an increase from 2019 to 2020. So FDI in 2020 was $2.65 billion. So let's talk about 2020. There was a decrease in at least 2 preceding years, but Ghana was able to recover that in a pandemic year. What was going on in Ghana that made the country so attractive in the midst of what we saw as a global economic situation caused by the pandemic?
Well, despite the global economic situation, just like you mentioned, investors still had their money and were looking for places to invest. I think that the reason why Ghana was able to attract this $2.6 billion was mainly because of the way the pandemic was managed in the country. If you look at how devastating the pandemic was in other parts of the world, even more developed than ours, and with far better healthcare systems and so on, you will see that Ghana was mostly spared, and this can be attributed largely to how the governments reacted in dealing with it. The Akuffo administration even received international acclaim for this from the WHO and other international organizations. Also, just like I've mentioned, I think it's worthwhile that I repeat this, that the Akuffo government has demonstrated a willingness to support foreign investments into the country. And this drive was not really, was not reduced even in 2020 during the pandemic. It was still a drive government and the president were very conscious about, and were very intentional about in making sure that investors find the country to be an attractive place for investment. Apart from this, the government also tried to encourage local participation in the economy, since we had to be more reliant than we usually are, and this was an opportunity foreign investors felt they could take advantage of. I think that these conditions helped in making Ghana attractive and helped in making the government attract this level of investment, even in 2020 when the whole world was facing the pandemic.
Okay, so let's stay with that. So in normal times, attracting $3 billion would not be seen as anything that's particularly ambitious. But the year after a pandemic, the year after the world is trying to get back on its feet, we know that it is not the usual times. Even the United Nations Conference on Trade and Development says that global FDI slumped by some 42% in 2020 due to the effects of COVID-19. So do you think that this target of $3 billion set by the GIPC is too much, too little, just about right, given the economic situations of the world? Is it a Herculean task that the center is setting for itself? What's your thought about this target?
I mean, if you asked me this a couple of months ago, I've said it's not too much of a Herculean task, because the Ghanaian government seems to have gotten the formula right in encouraging investors into the country. Even at a time when it seemed almost impossible last year, the GIPC was able to attract a sizable level of investment in. That notwithstanding, I think that we're already halfway through the year, and we have currently met about only a quarter of the $3 billion target. I wouldn't really call that being on track. But despite the problems that the country, together with other countries, faced last year, even at the height of the coronavirus pandemic, the GIPC was able to bring in the $2.665 billion that you mentioned. I think that there's a signal of the level of confidence investors all over the world have in the country and the investment climate in seeing. Because really, currently, apart from the imposition of safety protocols to help stave off the virus, I can almost see that economic conditions and the level of economic activity in the country seem to have returned to pre-COVID levels. So this, coupled with the seeming increased level of confidence in the country, is what I believe Mr. Yofi Grant gave Mr. Yofi Grant the confidence to make such a bold projection of $3 billion. I don't think we'll be able to meet it looking at the current rates that we are going at, but well, somebody can come in and then invest a really huge amount at one time. So let's see how the rest of the year goes.
Okay, so let's see what Ghana has done so far. So according to reports, the country was off to a bright start. There were about $500 million in FDI that came into Ghana in the first 2 months of the year. Up to now, we're being told by the JIPC that Ghana has raised $780 million. This is June ending. It's ending the fiscal year as well. You have another 6 months to make up the difference between the $780 million to the $3 billion. Where did this money come from? Do you know where these investments are coming in from as of right now? How are they being directed already? Do we have information about that?
No, exactly. I've heard that some of it came from the UK, especially in the advent of the trade agreement that the Trade Ministry recently signed with the UK government, but not exactly. A lot of it I know is going into the agri sector to take advantage of some of these policies that the Akuffo-led administration has put in place to make sure agri is an attractive place for investors. But as to the very nitty-gritty details, it's difficult for me to say. But I think that anyway, yeah, I think that's it.
All right, Benjamin, hold on. We're going to take a quick time out now. But when we come back, there was a publication released by the United States Department on the 2020 investment climate for Ghana. And that summary listed a number of issues that would hinder direct investment, foreign direct investment into the country. We'll get into what those challenges are and how they're being addressed in Ghana. This is Business Edge. Do stay with us. So Ghana has projected that it wants to raise $3 billion in foreign direct investments by the end of 2021. Is that possible? Where will the money come from? And what challenges could hinder the country from achieving this? My guest, Benjamin Ato-Kwanzaa, is a financial analyst joining us from Accra, Ghana. Benjamin, I want to read out what the U.S. State Department 2020 Investment Climate Summit, statement on Ghana said in terms of challenges that could hinder FDI in the country. So they said these challenges include a burdensome bureaucracy, costly and difficult financial services, underdeveloped infrastructure, ambiguous property laws, costly power and water supply, high cost of cross-border trade, a shifting policy environment, lack of transparency, and an unskilled labor force. What do you think about these challenges that have been highlighted? And has government taken action on any of these particular issues?
Well, no country is perfect. I mean, there are a lot of problems that exist everywhere, all over the world. And these countries, these problems that the US even has mentioned are not really exhaustive. I could even add some of it to this list. But I think that overall, the investment climate is what investors look at. There are problems and challenges everywhere, but are they going to affect the returns on the investments of these investors more negatively than the investment climate in the country, going to make the investors reap enough benefits from the investment that they are making? I think either way, African countries really need to make sure that the economic conditions are perfect. I mean, in Ghana at the moment, some of the economic indicators like inflation, like the stability of the city, and a host of other things. I mean, freedom of speech and then safety in the country and all of that come into play. And so investors have access to all of this information, both the good and the bad. But I think that when you look at all of these things spread across the table, the positives far outweigh the negative, and it's really not going to have a negative effect on the level of investments that we expect foreign investors to bring into the country.
Okay, so let me take you up on one more issue that was pointed out in that publication. It talked about the troubling trend in investment policy over the past 6 years. It said that there was passage of local content regulations in the petroleum and power sectors that may discourage needed future investments. We've had conversations on the electricity situation in Ghana. We've talked about Ghana's drive as well in the oil and gas sector as well. What's happening in this sector regarding regulation and policy and the link to foreign direct investment?
Not too much. I mean, from the last time we spoke, the government doesn't seem to really have a grip on making sure that the power situation is stabilized, for example, or to making sure that the cost of fuel or cost of petroleum products does not rise so astronomically. Just a couple of days ago, fuel prices rose up again. I mean, there isn't really a lot of commitment from the government to make sure that the public is sort of protected from, the volatilities in the international market when it comes to some of these products. But like I've said, every country has their own problems, and this is some of the problems that the Ghanaian the Ghanaian people face. As I sit here at the moment, it's difficult for me to see that, or it's difficult for me to admit that the government doesn't seem to be to be in a position to make sure that these problems are sort of sorted out, to make sure that more investors even come in. And it may be the reason why the target doesn't look like we are going to be able to meet it this year. But I think overall, the investment climate is more conducive than it isn't, even in the midst of all these challenges.
So as a sidebar, is Doomstar still in effect? Are there still rolling blackouts right now? What's the electricity situation?
Doomstar is still in effect. I think yesterday, a new timetable came out. Luckily for me, my neighborhood wasn't part of this schedule, but Doomstar is still in effect.
Mm-hmm. All right, so we'll keep touching base on that. So Benjamin, I want to get back to this situation where Ghana was able to actually increase its FDI in 2020 when a global trend showed otherwise. In terms of what lessons there are from Ghana for other African countries, what are the top 3 things you would tell other African countries, even your neighbor, me here in Lagos, Nigeria as the big brother in West Africa? What needs to be done to be seeing this foreign direct investment? Investors will always look for the places where they can repatriate their money, where they can see easy movement as well, where there's a good population that can work and also purchase. But what are we looking at in terms of what Ghana got right that other African countries can learn from?
I think that the first thing that we need to look at is that African countries are not in a competition among themselves to attract these foreign direct investments. There's a lot of foreign direct investments to go around for everyone. What Nigeria and other African countries, even including Ghana, need to focus on is to make sure that they create an atmosphere and an environment that is enabling and friendly and conducive for businesses to thrive. Ultimately, this is what drives investors. Nigeria has been in the news recently, and it's sad to see it wasn't really for the best of reasons. In the federal government banning Twitter from operating within there and a couple of other things. I mean, things like this do not encourage investors to come into the country when the freedom of speech of the citizens of the country seem to be curtailed by the governments that are supposed to be enabling them. Then it sends a certain wrong signal to investors. So I think that governments all across Africa should make sure that the right signal is sent. Economic indicators need to be on track with what is really enabling for governments. For instance, until the last meeting by the monetary policy of the Bank of Ghana, the policy rate had been kept at a high level of over 14% for about a year. And all of these things helped to make sure that investors were making enough returns on their whatever investment that they were making. These are all conscious and intentional drives by the government of Ghana to make sure that enough foreign direct investment is encouraged into the country. I think that governments across Africa need to be intentional about this. They need to be conscious about it. They need to make sure that they put in place enough policies and enough measures to make sure that investors are not driven away. I mean, those that are in the country are not driven away, and those that are outside the country are encouraged to come in. So I think that these are some of the things that governments across Africa can look at.
All right, so I'm going to ask you for your own projection now. Going back to the figures for FDI from 2017, that was 4.9 billion. 2018, 3.54 billion. In 2019, 1.01 billion. And in 2020 was $2.65 billion. The projection from the GIPC is $3 billion for 2021. Where do you think the mark is going to fall?
I think it's going to be a little bit around the same level as last year. Just like I mentioned earlier, I mean, if you look at the current trend, we are already halfway throughout the year and we haven't even done a quarter. We have just done about a quarter of what the target is. So it's difficult for me to say that we are really going to meet the targets. I think that it will be something around what we achieved last year, the 2.65 billion. And even that's an optimistic view from my end.
And what do you think it's going to take for Ghana to get the optimistic view, the optimistic standpoint, in your opinion?
I think that some of the problems that we have mentioned here, if they are really tackled head on, Doomstar, for example, is really crippling a lot of businesses all across the country, several regions, many businesses are complaining about Doomstar. In recent times too, crime has also gone up a little bit higher. I mean, some bullion vans across various countries carrying money from various banks were attacked.
Yes.
People who've lost their lives in some of these attacks and all of that. I think that the city situation also looks like something that may be a little bit of worry for some of these investors. And also, corruption allegations in the government. These are things that come up from time to time, and these are things that if the government tackles head on, is going to really give the investors the level of confidence that they need to be able to come in to even probably surpass the $2.65 billion investments that we're able to rake in last year.
All right, Benjamin, we are at the halfway point of 2021. There is a target in sight set by the Ghana Investment Promotion Center. When we get to the end of the year, we'll touch base on this and see how Ghana performed in consonance with, of course, other African countries, but particularly in reaching the target that has been set. Benjamin Atokwanza, thank you so much for joining me from Accra, Ghana.
Thank you very much for having me, Tutolo.
All right, so we'll be wrapping things up with a few stories we're keeping our eyes on. NC4 to Watch is coming up right after this. And here are a few stories we're keeping our eyes on. First on the list, Nigerians are experiencing a shrinkflation. You heard me right, shrinkflation, due to the increase in the operating cost of production and the subsequent rising food prices as the economic crunch in the country continues. Now, shrinkflation is the process of reformulating or decreasing the size or quantity of an item while the price remains the same. The word is shrink and inflation put together. This strategy allows companies to boost their operating margin and profitability through lower expenses while maintaining sales volumes. The Kenya Electricity Generating Company, or KenGen, has announced plans to raise $1.95 billion in an effort to build new stations, as well as upgrade existing plants in a bid to almost double its power outputs using renewable fuel. The company is planning to add 651 megawatts from underground steam in the next 5 years. Interest rates are expected to remain contained this year despite consumer prices peaking to a 30-month high in May from a very low base a year ago. Now, Stats SA said that the annual consumer price index accelerated to 5.2% in May year-on-year from 4.4% in April. And finally on our list, Zimbabwe has made its first compensation payment as part of an agreement to settle a dispute with white commercial farmers who had their land seized violently more than 2 decades ago. At the time, Zimbabwe seized over 4,500 farms belonging to white commercial farmers from 2000 and pledged to compensate them for the land that was grabbed. And that's it on this edition of the show. Head to our website, head to YouTube, and don't forget to download our mobile app on your App Store and Play Store to take us with you wherever you go. That's it on Business Edge for today. I'm Tolu Lokwe Adeleru Balogun. Do have a good one.